Where there's an opportunity means there's a plan. And where there's a problem typically means there's no plan. So what we want to do in this video is talk about what history tells us, what do I do in this environment, and how we can have opportunity, which means we have a plan to start taking advantage of a simple fact, which is bear markets don't last long. And if we look historically back to 2000, look historically back to 2007, 2008, we know that bear markets are going to happen, but they don't linger. And so there is some sense of urgency for a two-part plan. One, we have to have a wish list or a shopping list, a list of names that we know that if they go on sale, we want to start building that portfolio position, and that we're in the planning stages now. It's a little early, but that's good. Early isn't bad for a plan. In fact, early is the perfect time to plan. So let's take this idea that we've been talking about now for 2 weeks in the Top Tier Outlook newsletter to our Sector Secrets Mastery traders and discuss something that we've been doing for a long time in the Sector Secrets Mastery, which is the portfolio positions, those positions where the time horizon is 6 months or greater, just to make sure we're all on the same page as far as what I'm talking about. Positions that we would expect to have at least 6 months, if not years. And that starts with a weekly time frame. So these are not built on a 1 hour time frame. This idea is not built on a daily time frame even. But what's really handy is this tool right here called the sanity check. Looks at the all-time high, right, which is that. And then it projects, okay, this is a 1%, 2%, 5%, 10%, 20% pullback. And while I'm not necessarily as a trader looking for percentage pullbacks, there is a huge amount of psychology around percentage pullbacks in the larger market conversation. Remember, we're never right alone in a trade. When we buy a support level on a weekly time frame, we do eventually need more traders either in agreement and then willing to buy at higher highs. And that's the recovery, right? We don't want to be first. We don't want to be too soon. We don't want to be last either, but we need a plan. So let's get into some of the tools that are on my screen. We talked about the time frame. We talked about the opportunity. So now let's talk about what's on this screen. What I have running here are my top tier candles. We do have the mean reversion of the top tier wave. I do have the equator here. These white dots tell me if we're in the bullish versus bearish hemisphere. I really don't want to buy much in the bearish hemisphere. Very seldom am I going to do this position portfolio entry in a bearish hemisphere. A couple other things. I want to know what the structure of this time frame, the weekly, is, and so I'll use the multi-structure for it. Am I in a neutral trend? Am I in a bearish trend? Or am I in a bullish trend? I don't want to be buying things in a bearish trend. Neutral is fine, bullish is better. And then below that, and this is a little bit more nuanced, and it's one of my indicators that I developed back in the financial crisis, back in 2007, 2008, we want a coattail size, right? You know, we talk about big money. We talk about institutions and hedge funds. Big is defined by volume. You know, when we say it's big size, the dollars that they're spending bring the volume. So we want to coattail that size. And this is the indicator that I use to do it because it shows where size tends to step in. It shows where, using volume, there's typically going to be support. And there's lots of ways to look at volume. This is one of the ways that I use it, and it's based on an anchored volume-weighted average price. All right, that being said, I've got this chart on XLP. I could easily pull up any symbol. So let's start off with one of my favorite sectors right now for this weekly time frame position portfolio setup. This is XLC. And if I haven't emphasized enough, look, these sales don't come often, nor do they linger for a long time. Every one of these quote-unquote sales was less than 1 to 2 weeks in terms of the zone. In this case, it is the mean reversion. And this is XLC. Now, XLC is a great way to get more bang for your buck because within XLC is a very pricey stock, Meta. We also have Goog and Goog L. We also have another pricey stock that's pulling back to a mean reversion, Netflix. So this is where you can take one ETF and take advantage of all the different heavily weighted names within it. The plan is here, right? I'm going to start with the bottom of the chart. I have a trend. This lower row is green, and actually the upper row is as well. That's bullish momentum, or MOMO, and the bottom row is trend. Another thing that I can see at the bottom of the screen is that when I look at where support is in XLC based on volume, it does seem to be at the second standard deviation. This line right here is the second standard deviation. Now there is support below that as well. We've had support at the mean, right? But the nearest support level that we're dealing with is the second standard deviation. And that's going to correspond with pretty much what we're dealing with right here. That brings us to the zone of the mean reversion. That mean reversion is waiting between about 95.30 all the way down to 92.5. In that zone, this will be a mean reversion. In that zone, this is a position portfolio setup. The idea is to hold it for 6 months and see if it can gain a certain percentage, and then we can put it in the longer term position portfolio. So everything kind of has a 6 month, I like to call it make the team window. And this is the difference between a buy and holder, which I am not, right? This is not investing. I don't care if it takes 20 years. You can have a trade that's been open for 20 years. The difference between a buy and holder is, well, they're just going to buy it and they held it. They have it. They're married to it. I don't ever want to be married to my positions because it means it's taking up capital. And in an environment where we're going to have a lot of sales, and the question of how long this window will be is definitely what's up in the air. Historically, bear markets are very short. They could last a handful of months to 6 or 9 months. So this is not about predicting what's going to happen. This is more about putting that wish list together and finding the tools that'll give us the zones and the precision of price. And XLC is a great example. Another one, and this is a little bit different example. Right, we're going to go from XLC to maybe a symbol that a lot of folks would say, Rog, I got diamond hands. I want to be a hodler. That's Bitcoin. Right? This can work with any kind of symbol. And for a lot of people, Bitcoin is something that they want to buy at a good price and hold for a really long time. And Bitcoin, not too recently, pulled back to that mean reversion zone in this area. And that zone is waiting roughly between about 85,600, right? All the way down to call it 76, call it 280, right? 76, 280. That area would be a mean reversion. And that's the difference between traders having a plan, right, versus a problem. By the way, buying at highs is not a plan either. Following the frenzy to the upside can leave you vulnerable to these types of pullbacks. And so rather than getting caught up with all the hype and highs, right? Is it hype or is it highs? It's usually both. Rather than getting caught up with the hype, right? You wait for the sale, right? And that's what we've got right now, even on something like Bitcoin, which would be a great symbol to watch via the IBIT versus Bitcoin, right? So if you want to buy shares of something that's tethered to much of the Bitcoin narrative, IBIT would be a great choice, all right? So watch Bitcoin, take a look at IBIT. There are other symbols that are pulling back in ways that are definitely on the radar. And one of the things we're going to dive into in the premium video and things that we'll be doing going forward in the Sector Secrets Mastery is having a plan and having alerts around the narrative of this fantastic opportunity that right now, maybe for the next 1 month, it could be in fact it's 3 months, but we're going to plan, we're going to prepare, we're going to have this level of precision around prices. And this this last image, which we'll segue into when we go into the premium video, this is how we can kind of understand what's on sale versus what we don't want to chase higher. Anything at the top of the list, that might be great for swings. And you'll notice in my swing entry videos and my swing entry conversations, we're talking about these. But for the purposes of shopping, we actually want to find things that are a little bit weak. We want to find things maybe in the lower half of this list, the list that's below the zero line, the list that's showing that there's a pullback, that there's weakness happening. That weakness happening is, in fact, the sale, right? So this is where we can solve the problem with opportunity, have a plan, right? Start preparing, because history tells us bearish markets don't last long. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.